finance minister lowered the growth target for the economy to rein in rising prices. Berat Albayrak said the economy is expected to grow 3.8% this year and 2.3% in 2019.
The National Agriculture Project will monitor the supply of agricultural products to bring down food inflation. And we are introducing a cap on rent increases to help rein in the consumer price index.
That's due in part to efforts to bring down inflation, which reached 18% last month. The government's also aiming to cut its fiscal deficit by $10 billion this year through lower spending and higher taxes. It's prioritizing spending on exports, tourism and new industries like biotech and IT, and it's planning incentives for industries that provide domestic alternatives to imported products.
This economic program is well organized. It's prepared realistically because it touches all the layers of the real economy. The targets for inflation, the current account deficit, and economic growth are realistic.
But government spending isn't the only concern for investors. The recent fall in the value of the Turkish lira has affected banks' ability to repay foreign loans. And analysts expect the government to help the banks and their borrowers restructure these loans.
There have been a lot of talk about a bad bank program, about taking some non-performing loans off the table, helping recapitalize banks that might have some problems.
The brunt of the weakness in the currency has been borne by the financial sector, and government support for the banks would go a long way in boosting investors' confidence. Mobin Nasir, TRT World, Istanbul.
So for more on the Turkish economy, Jared Irving joins me now here in the studio. He's a partner at private equity advisory firm Arch Emerging Markets Partners. Jared, great to have you on the show. What was your initial reaction to the finance minister's announcements today? Does it go far enough to put the Turkish economy back on track?
Firstly, thank you for having me. I was pleasantly surprised with the announcement today. I think the policy numbers that came out were realistic. They were based on economic facts, and they weren't overestimated that would cause problems if they are underachieved. So I was positive about the announcements today.
Tell us a little bit about your firm and its how it views Turkey and how it's investing in Turkey. Where do you see the risks and where do you see the opportunities?
We currently don't have a Turkish fund that can invest in Turkey. However, it is something that we're currently looking into, and hopefully in the short term we'll be able to invest in Turkey. I think there are nuggets of opportunities in the Turkish market. It is a difficult place to invest with fluctuations in the currency. That doesn't help with valuations and understanding what exit valuations would look like. However, if you can find certain sectors that are labour-intensive, export-based, have some form of natural hedge against currency fluctuations, then yes, it would be somewhere to look.
In particular, I suppose you'd be looking at industries where there is a significant amount of local content.
Yes.
In there. Let's talk about some of how these latest announcements might pan out. Turkey's slashing its growth forecast. Last week, it dramatically raised interest rates. Is this, in your view, going to reduce the pressure on the lira in the short to medium term?
Short term, I think that's a difficult question to answer. If we can bring some stability into the market, which these numbers certainly are trying to do, I think a lot of the public announcement today was actually focused on stability. Obviously, stability depends on other political issues, geopolitical issues. So hopefully, if there's no other greater shocks, then I think in the short term, the next month or two, some stability to currency would be great, followed by longer term, medium term reduction in the lira.
So if I'm reading you right, what you're saying is, from an investor's point of view, looking at it for the long term, you would prefer perhaps a slower economic growth rate, but one that is chugging along,
yes,
more
definitely,
sustainably.
And if you look at the GDP growth rates over the last 2 years, people say Turkey's been running at an average of 7%. It's actually been significant fluctuations from 11% down to 4%. So I think foreign investors typically would rather have stable, steady growth, even if that is at a lower rate, because it's easy to predict.
Yeah. It is an interesting question, though, when it comes to how foreign investors view Turkey, because for the longest time, a lot of foreign investors have been saying Turkey needs to cool down its growth rate because inflation is running too high. Now that the government is doing that, some investors are saying, well, Turkey's now not going to grow fast enough. How does the government square that circle with some investors?
Certainly that's not the view that we would take. I think certainly we would much rather have a lower stable growth rate than a significant fluctuation or a significant peak in effectively hot growth that is not stable long term.
Some of the other sort of hot issues when it comes to Turkey's economy include the deficits.
Yes.
Let's talk about the budget deficit.
Yes.
This year, the government is saying it's likely to be 1.9% of GDP. Compared to other countries, I mean, compared to the US, 5%
yes.
of GDP. France, 2.6%.
Yes.
From your point of view, does the deficit factor in your valuations?
Deficit doesn't necessarily factor into our valuations. It does factor into our macroeconomic view on Turkey. And I think the sovereign balance sheet of Turkey is actually very strong in comparison to most countries. Certainly if you look at southern European countries, including France, it is an attractive part of the economy and of the macro statistics for Turkey. I think it was Goldman Sachs Asset Management a couple of days ago said that they're looking at Turkish US dollar treasury bonds because the balance sheet is stable, we have low balance accounts. So I think that's one positive that is underrated in the Turkish economy.
Once again, where are the big risks though going forwards? I mean, we mentioned in our package earlier the non-performing loans perhaps in the banking system. Is that a potential worry for you?
It is. I think there is a significant concern by foreigners about NPLs sitting in balance sheets of the banks. I think that also goes into liquidity issues. If liquidity was to dry up in the market, then there would be a significant shock to the economy. So I think it was a positive to hear from the Minister today that one of the focus points will be liquidity into the banking market so that it goes down into the real economy and helps businesses going forward.
Jared Irving, we're going to have to leave it there. Jared Irving of Arch Emerging Markets Partners, thank you very much indeed.
Thank you.
Thank you.